if China decides to reopen, I don't want to ask you when you think that might actually happen, what kind of upside might this provide DBS, and what particular segments of a China reopening, a potential China reopening, could provide that upside for your bank, sir?
Actually, a China reopening would provide upside to all of Asia. It would be a really nice counterbalance to a slowing US and a slowing Europe. We saw this year that as Southeast Asia opened up, you got a real nice fillip, and you got it in spending, you got it in credit cards, you got it in loan growth. So there's no question in my mind that if China opens, and if the border between China and Hong Kong opens, you will see some real meaningful impact on growth around the region. Like I said, it would hopefully be a countervailing force to the slowdown in the West. For us, our lines of business is broad-based. Our lending book benefits. Our wealth management business benefits as the Chinese can travel more freely and they come into Hong Kong and they come into the region. And a large part of our trade finance book benefits as well, as the pickup in Chinese activity sort of spills over to many other countries.
Very quickly, Southeast Asia has been reopening for most of this year, actually providing DBS some upside. Is the reopening play in Southeast Asia now done, or are there still pockets of reopening in the region that could potentially benefit DBS, and where do you see that if that's the case?
Well, the opening is not done in the sense, if you look at our credit card spend, that's back to pre-COVID levels and beyond. But if you look at the spend on travel, that's still way short of where it used to be. Travel spend, as an example, contributes a lot to our fee income. So that's an area where, as travel picks up, you could still see some more upside. The bigger challenge in Southeast Asia, though, is not the opening. It is really the overall environment. Market sentiment has been weak, and therefore our wealth management business, capital markets, ECM, debt capital markets, all of that has been somewhat slow this year. And therefore, what we're looking to is actually an opening up of the financial markets, not just an opening up of the real economy.